Joining me right now, former economic advisor to President Obama, Austan Goolsbee, along with Allianz chief economic advisor and President Obama's Global Development Council chairman, Mohamed El-Erian. Gentlemen, good to see you. Thank you so much for joining us.
Great to see you, Maria.
Thank you. So, Mohamed, let me kick this off with you. To what do you attribute this week's performance? We see a real, would you call it a romance with markets as Trump was elected president? Why did stocks go to record highs? Why did interest rates move as high as they did? The 10-year highest since April.
Because traders and investors, Maria, have embraced the prospects of higher growth and high inflation under President-elect Trump. And they've done that for two reasons: content and tone. The content of his comments has been to emphasize the pro-growth elements of his program: high infrastructure spending, corporate tax reform, deregulation, and downplay the anti-trade elements. And the tone has been incredibly constructive and unifying.
Yeah, I think you're right. I mean, when you look at the infrastructure plans coupled with the lower taxes and a rollback of regulation, he's promising to spur economic growth. Austan, what do you think about that? How much growth are you expecting as a result of these plans?
Not a ton. I mean, I think we've had a significant uncertainty that was bearing down in the market, trying to figure out this question that Mohamed raises. Is Donald Trump going to go for that nationalist kind of protectionist agenda, or is he going to shift, if he were elected, to a more traditional Republican agenda of, big tax cuts, regulatory cuts? Thus far, he seems to be going toward the more standard Republican route, but we have yet to see this other shoe drop, which is how are his supporters, the non-establishment Republicans, going to react to the last 72 hours in which they're taking down a bunch of the big promises on the campaign website. They're named a bunch of lobbyists, and the list of people they're talking about for jobs in Washington are the same old lifetime politician kind of names. I think we saw when George Bush enacted pretty close to the program that Trump is now describing: big tax cut, big rollback of regulations that had existed under President Clinton. We did not get a very big jump in growth. You got a little bit, but we were going into a recession right then.
But so wasn't that coupled, Austan, with a whole host of new regulations, which did also hamper growth? So in other words, what you're saying is you don't think lower taxes, you don't think lower taxes and a rollback of regulations will lead to growth?
I do not think that giant tax cuts for high-income people and corporations lead to rapid growth. That did not happen when George Bush did it. And factually, it's not true that George Bush increased a bunch of regulations. When he came in, he repealed a whole bunch of the things that Clinton had put in. I think the argument that unpaid-for tax cuts that are going to grow the deficit will create magic beanstalk beans that grow the economy, I think, has been disproven many times. I think they will pass a tax reform of that nature, but I don't think that will have a big impact on growth.
So what do you think's been wrong with the last 8 years then? How come we're still at just under 2% growth?
The reason we've been about 2% growth, as we've talked about many times, is we had a large bubble that popped, and the economy can't go back to doing what it was doing before the recession began. And so that involves transforming the main drivers of growth, and that's a slow process. And what we need is to shift to more exports, more capital investment, more innovation-led growth, and you can't do that overnight.
Mohamed, let me ask you about this move in interest rates. Do you think that has to do with the worry about inflation, given that we are going to see more spending in terms of infrastructure, which Trump has spoken about, or do you think that we're seeing that have to do with the Federal Reserve?
I think we're seeing mainly because of the embracement, as I said, of higher growth and high inflation. We also are having a redefinition, if you like, of what the Fed is likely to do. And with the market so calm and with inflationary expectations going up, that means the Fed is more likely to hike in December than what people thought immediately after the election results. And finally, in the background, there's this concern, and it hasn't come out yet, and it's important that it stay in the background. There's this concern as to whether a Trump presidency will come after the political independence of the Federal Reserve. So the main drivers now are growth, inflation, to a lesser extent, the Fed.